Sooner he's gone the better. Farage blasts Brexit naysayer Carney over interest rate rise. Exclusive: Nigel Farage has blasted the Bank of England governor after Mark Carney raised interest rates to 0.5%. The BOE governor announced the move earlier today, which was the first rise in the bank base rate for more than 10 years, blaming Brexit for the need to increase the cost of borrowing. But Canadian Mr. Carney's decision to raise interest rates was condemned by former UKIP leader Nigel Farage. Mr. Farage, 53, told Express.co.uk, he blamed Brexit for interest rate cuts and now he blames Brexit for interest rate rises. He shows himself to be wholly partisan in everything he does and a mile away from being an independent governor of the Bank of England, and the sooner he's gone the better. Mr. Carney said, "These are not normal times. Brexit will redefine the UK's relationship with our largest trade and investment partner." The Bank of England said in a statement, "The decision to leave the European Union is having a noticeable impact on the economic outlook." The overshoot of inflation throughout the forecast predominantly reflects the effects on import prices of the referendum-related fall in sterling. Uncertainties associated with Brexit are weighing on domestic activity, which has slowed even as global growth has risen significantly. And Brexit-related constraints on investment and labor supply appear to be reinforcing the marked slowdown that has been increasingly evident in recent years in the rate at which the economy can grow without generating inflationary pressures. There remain considerable risks to the outlook, which include the response of households, businesses and financial markets to developments related to the process of EU withdrawal. Interest rates were raised 0.25% from 0.25% this morning. Concerns were raised by charities and business groups prior to the bank's announcement. They complained already stretched firms and households would be put under further pressure by a rates increase. However, the rise has been described as good news for Britain's savers. Those with a variable rate mortgage will be hit by the rise. Around 1 in 10 households are currently using this mortgage type. Mr. Carney said, "Households are generally well positioned for a rate increase. More are in work than ever before. Only about 1/5 of people with mortgages have never experienced an increase in bank rate." Policymakers on the bank's 9-strong Monetary Policy Committee, MPC, voted 7-2 in favor of the quarter-point rise, which marks the first rates increase since July 2007. It comes as the bank looks to dampen what it sees as Brexit-fueled inflation, which it predicts will now peak at around 3.2% this autumn. The Bank of England has also signaled more gradual increases are on the way in a bid to dampen inflationary pressures. Mr. Carney said, "With unemployment at a 42-year low, inflation running above target and growth just above its new, lower speed limit, the time has come to ease our foot off the accelerator." The bank's quarterly inflation report is based on financial market expectations for 2 more rate hikes over the next 3 years to return inflation back to its 2% target, which could see rates hit 1% by the end of 2020. But sterling fell sharply, down more than 1% to $1.31 US dollars and €1.12, as the bank's comments over future rises were more cautious than expected. The milestone rate hike comes as the bank cut its forecast for growth to 1.6% for 2017 from the 1.7% previously predicted, but held forecasts at 1.6% for 2018 and 1.7% for 2019. It is penciling in growth of 1.7% for 2020. Mr. Carney added monetary policy would continue to provide significant support to the economy. On the rates decision, Chancellor Philip Hammond tweeted, "Our economy is strong and resilient, supported by independent monetary policy and stable prices from the Bank of England." Theresa May's official spokesman indicated the Prime Minister would like to see banks pass on the interest rate hike to savers. A Downing Street spokesman said, following the rate rise, we would expect to see higher interest rates to be passed on to savers. Some banks have already said they will increase rates on their savings products. We would expect others to follow suit. Experts estimate 8 million Britons have never seen interest rates rise in their adult lives, with borrowing costs having languished at rock-bottom lows since the financial crisis.